The stock market is like a big chessboard, where each ETF is like a special piece making its move. But this isn't your regular chess game. It's a thrilling adventure in investing that's full of surprises. In the exciting world of investment chess, Warren Buffett's top 8 ETFs are the stars of our financial game. Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. Just like in chess, successful investing means planning ahead, being flexible, and having fun. With Buffett's top 8 ETFs, it's like having a secret weapon on your team. A group of financial experts ready to face any challenge the market throws at you. So grab your chessboard, gather your pieces, and let's discover the smart strategies behind Buffett's investment plan. It's not just about playing the game, it's about mastering the board and winning big with style and flair. But first, what are ETFs? ETFs, or exchange-traded funds, are like versatile pieces on a chessboard. Just as each chess piece has its unique role and moves, ETFs pull investors' money to invest in a mix of assets like stocks, bonds, or others. They're traded on stock exchanges, making them flexible and accessible to investors throughout the day. Just like in a game of chess, each piece has its role and moves differently. In this game, ETFs are like the queen. They're much more flexible and can move around the board freely. Instead of pieces, they hold different investments like stocks, bonds, or other assets. Now, just as you'd strategize to protect your king in chess, investors use ETFs to protect their money. These funds gather money from lots of investors to buy a mix of stuff, spreading the risk like moving your pieces around to avoid getting checkmated. What makes ETFs even more appealing is that they usually cost less than other types of funds, acting like a cheaper move that still gets you closer to winning. Just like a game of chess, investing requires strategy and flexibility. ETFs offer a way for both seasoned players and newcomers to diversify their portfolios and aim for victory in the financial game. Pretty cool, right? Now, it's time to explore these 8 magical Vanguard ETFs, a lineup of investment tools that embody the principles Buffett swears by. Low costs, covering a wide range of markets, and building wealth for the long haul, and see how they can strengthen your investment strategy. Just like adding powerful pieces to your chessboard. Starting off our list, we've got the Vanguard S&P 500 ETF, also known as VO. The queen of our investing chessboard. It's popular for good reasons. Broad market access, low costs, and impressive performance. With an expense ratio of just 0.03% and an average annual return of 12.70% over the past decade. It's a winner! Imagine investing $10,000 in VO. In 5 years, it could grow to around $18,100. In 10 years, you're looking at roughly $33,500. And in 30 years, it could hit around $361,500. That's like turning your pawn into a queen in just a few moves. VO's strategy is spot on. Low costs and high growth companies. It's like playing chess with the stock market and winning every time. So if you're all about the long game like Warren Buffett, VO is your perfect match. Next on our list is the Vanguard Dividend Appreciation ETF, or VIG, the knight in shining armor of our investment chessboard. It's perfect for stability and extra income compared to the S&P 500. With a low expense ratio of 0.06% and a dividend yield of 1.77%, VIG focuses on companies that consistently increase their dividends over 10 years, giving investors a 33% higher dividend yield than the broader market. Investing in VIG means diving into a pool of over 300 companies across various sectors, like tech, finance, and healthcare, providing a stable and diversified investment. Let's talk about growth. If you invest $10,000 in VIG and it keeps up its 10-year average annual return of 11.23%, you're looking at impressive growth. In 5 years, your investment could reach around $17,126. In 10 years, it could hit roughly $28,988. So if you're looking for a solid, long-term investment, VIG is your move. It's like having a diversified army of pieces on your side, making your investment more stable and less prone to market swings. Third on Buffett's list is the Vanguard FTSE All-World ex-US ETF, or VEU. It's like the global player on our investment chessboard, offering international exposure with a low expense ratio of 0.07% and a dividend yield of 3.35%. Despite historical differences, VEU provides global diversification and potential for high-value opportunities. Much like how expanding your chess pieces across the board can open up new winning strategies. Investing $10,000 in VEU with its 10-year average return of 4.46% could grow to approximately $14,438 in 5 years, and about $37,251 in 10 years. It aligns with Buffett's principles of long-term investment in quality assets, making it a must-have for any portfolio looking to cover more ground and strengthen its position in the game of investing. Next on the list is the Vanguard Intermediate Term Bond ETF, or BIV. It's like adding a sturdy castle to your chessboard of investments, offering stability and income, with a low expense ratio of just 0.04% and a high dividend yield of 3.27%. BIV consistently outperforms its peers in the Morningstar Intermediate Core Bond Fund category. Investing $10,000 in BIV, with its average annual return of 1.94% over the past decade, could grow to $10,867 in 5 years, $11,380 in 10 years, and $13,340 in 15 years. It offers steady growth, income, and stability, aligning with Buffett's principles of quality and balance in a diversified, long-term investment strategy. Before we continue, are you finding this breakdown helpful? If so, subscribe for more investing insights and drop a comment down below with any questions or thoughts. Now, on to number 5. Our fifth pick is the Vanguard ESG US Stock ETF, or ESGV, with an expense ratio of 0.09% and a dividend yield of 1.09%. ESGV appeals to socially conscious investors. Since its launch in September 2019, it has shown an average annual return of 13.31%, promising a substantial growth while adhering to ethical investment standards. ESGV selects companies aligned with the UN Global Compact's principles and excludes those involved in controversial activities. Despite its ethical stance, it maintains a diverse portfolio of mainly large-cap US companies, with a focus on growth stocks. Investing $10,000 in ESGV could potentially grow to $16,788 in 5 years, and an impressive $424,000 in 30 years. Its blend of ethical investing, diversity, and strong growth prospects aligns perfectly with Buffett's investment philosophy, making it an excellent choice for conscientious investors seeking long-term financial growth. Ranked 6th on our list is the Vanguard Healthcare ETF, or VHT. It's like adding a powerful rook to your investment chessboard, perfect for investors drawn to the resilience and growth potential of the healthcare sector. With an expense ratio of 0.10% and a dividend yield of 1.28%, VHT offers broad exposure to around 400 entities involved in healthcare products, services, technology, and equipment. A standout feature of VHT is its impressive 10-year average annual return of 10.88%, driven by a strategic emphasis on major healthcare companies. These top-tier firms make up nearly half of the ETF's portfolio, showcasing VHT's concentrated yet robust investment approach. Investing $10,000 in VHT could potentially grow to approximately $16,728 in 10 years, $7,000 to $8,900 in 20 years, and even soar to $221,600 in 30 years, capitalizing on its historical performance and the demographic trends favoring the healthcare industry. Seventh on Buffett's list is the Vanguard Small Cap Value ETF, or VBR. It's like adding a strategic bishop to your investment chessboard, focusing on undervalued U.S. small cap companies. With an expense ratio of 0.07% and a dividend yield of 2.01%, VBR offers around 850 holdings, where the top 10 account for just 6% of the fund's assets. A $10,000 investment in VBR could grow to approximately $15,600 in 10 years, and a remarkable $46,200 in 30 years. It perfectly aligns with Buffett's principle for long-term wealth creation. Closing our list is the Vanguard Growth ETF, or VUG, embodying Warren Buffett's strategy for substantial long-term growth. With an impressively low expense ratio of 0.04% and a modest dividend yield of 0.53%, VUG grants cost-effective access to around 240 U.S. large-cap growth stocks, heavily weighted towards technology. VUG is an excellent choice for investors looking to concentrate on leading technology and consumer discretionary firms. And that's it, the 8 magical pieces of Buffett's list of Vanguard ETFs. Each ETF offers a unique pathway to achieving remarkable financial growth and stability, from broad market exposure to specific sectors like healthcare and technology. Now that we've provided you with the essential pieces, it's time for your next move in this investment game. Will you make wise moves or risk ending up in checkmate? And as always, thank you so much for watching. If you like this video, please don't forget to give a thumbs up, comment, share, and subscribe to our channel to get notified of our latest updates.